China's exports grew at their fastest pace in 15 months in June, but imports shrank due to weak domestic demand. Analysts say Friday's mixed trade data will support calls for more government stimulus as the economy struggles. Outbound shipments from the world's second biggest economy grew 8.6% year-on-year in value in June. That beat analyst projections and May's number. Stronger than expected exports have been one of the few bright spots for China. Its economy has struggled for momentum despite efforts to stimulate domestic demand following the pandemic. A prolonged property slump and worries about jobs and wages weigh heavily on consumers. In a sign of weak domestic demand, imports hit a 4-month low last month, shrinking 2.3%, which was below forecasts. It puts pressure on exports to help the government hit its economic growth target of around 5% for this year. But analysts have warned relying on strong overseas sales is a risk for Beijing. They worry exports may not be sustained as key trade partners become more protective. In May, Washington hiked tariffs on a number of Chinese imports, imposing 100% duties on electric vehicles. The EU confirmed last week it would also levy tariffs on EVs of up to 37.6%. Turkey announced tariffs on Chinese-made electric cars last month, while Canada is also considering curbs.